Welcome and good afternoon. I'm Bruno Lee, Regional Head of Retail Wealth Distribution and the moderator of these sessions on ESG. This year, we have received a lot of inquiries and interest from our Asian clients on ESG. Many of our clients are interested in how ESG are being incorporated into our existing investment strategy and process, while some are interested in what new strategy will be made available. This is a very timely session because last week, US President-elect Joe Biden has pledged to rejoin the Paris Agreement on climate change on the first day of his presidency. And China has announced its aim for carbon neutral by 2060. So I'm sure all of you will be very interested to know how ESG can be used to help you or your client to better manage ESG-related risks, to enhance potential returns, and to support our thematic mandates. To get started with this exciting topic, I'm pleased to introduce to you Eric Niche, our Asia Head of ESG, based in Singapore. Hi, Eric.
Hi, Bruno.
Hi.
Thank you. It's a pleasure.
What is the level of interest of ESG in Asia from our various clients, including sovereign wealth funds, intermediaries, and also end customer? And how does it compare with other regions? Is Asia on par with other regions? And if yes or no, why?
Yeah, thanks, Bruno. And I think, as you said, it's a topic that is seeing a lot of interest from across many different types of our clients. And in fact, one of the earlier sessions polled the audience about their interest, and it found that 92% were either incorporating ESG or wanted to. But 57% also didn't know how. And so, I think there's some confusion around it, and I'm happy to be here today to talk a little bit about how we do it. So, as to whether Asia is lagging, I think that's a question that we hear a lot. And it might have been the case a few years ago. But as you mentioned with the China 2060 net zero announcement, I think governments in the region have really been acting on environmental issues. And so in addition to China, you've also seen net zero commitments from South Korea, Japan, Hong Kong. Both Vietnam and the Philippines have also made significant announcements. And the regulators are following suit. So last year, we've responded to a consultation on the Green Catalog in China, the proposals from the MAS in Singapore and the SFC in Hong Kong, and the SEC in Malaysia.
Right.
And
so,
I think...
So recently, what is the most asked questions from Asian investor from a public or private market point of view?
I think the most asked question is always about how it relates to returns. And so does ESG investing enhance returns, or what's the impact? So I think when we get that question, I think the can it enhance returns? The short answer is yes. There's a large and growing body of evidence that shows that it can be used to protect and enhance returns. But I think that there's some important nuance to that. And I think this is where some of the confusion can come in, because there's different ways to use ESG analysis to go about that. And there's three main ways that we can try and use the ESG analysis to enhance returns.
Yeah, so maybe Eric, let's talk about our process first, and how does Manulife Investment Management integrate the ESG factors into our investment decision, and how is our investment process unique from the others?
Sure. So I think the important thing about what we're doing is that we're looking to integrate ESG at every step of the investment process. So from how we're sourcing the data and using the new ESG data sets that have become available, to how we're using that in our research and our valuation portfolio construction, and then engaging with the companies and voting our proxies once we're invested. And so, but I think a lot of people define this differently. And so if we can pull up the first slide, I can talk about how we define it. So we define ESG investing or sustainable investing as the consideration of environmental, social, and governance factors alongside the traditional financial information. And so this shows some of those issues that we would consider. And it's not just about climate change. There's a number of other environmental topics that are very important, as well as the social and governance issues. And so, as I mentioned, what we're really looking to do is incorporate that into the investment process and all parts of the investment process. And that can happen in different ways for the different teams. So the ESG team works with the different investment teams to do this in a way that's most appropriate for their team and their strategy.
Okay. So I understand that we have the ESG incorporated in our investment process, but for a lot of our customer, it's also very important to understand how are we reporting the ESG in our communication to our clients, so that they can also keep track of that to ensure that the mandate or the fund that they have selected indeed follow the ESG process and for their own reporting purposes.
Yeah, and that's something that we've been working on for the better part of last year and are excited to roll out to clients. So we've been developing ESG client reporting, and exactly like you said, because we want to be transparent and to communicate the ESG work that we're doing. And in addition to that, we publish a sustainable investing report, which is available on the website, and also talks about a lot of our processes and activity.
Right. So of course, it is very important that it is not just in the process, but the communication. But I think for a lot of our clients, ESG obviously help them to manage some of the climate change risks or some of the fundamental investment risks. But what about the return? I think at the end of the day, I think from an investor's point of view, having superior return is also very important. So can you tell us a little bit more about how can the ESG not only protect the risk, but also enhance investment return for our client? And does that compromise the return, or is the ESG investment thesis really more resilient?
So I think it definitely is, but there's different ways that can happen. So in terms of it can be used to protect capital and avoid risks, like you said, or to take advantage of different opportunities. So if I can go to the second slide, I'll show you a couple of examples of what I mean.
Yeah.
So this is a case where we were able to avoid governance risk in one of our fixed income portfolios. So this case relates to a car rental company in China that actually had quite strong market position. So if you were only looking at the financials, it would look pretty good. But on the governance side, the company was involved in some related party transactions that were providing red flags to us. The board lacked independence, and many of the members of the board actually had ties to the chairman's other companies. And so we decided not to invest in this company. It later came to light that one of the sister companies was inflating the sales and supporting that with the related party transactions, which caused the share price and the bond prices to plummet. And so by avoiding the company, we were able to avoid that risk in the portfolios. Now, on the flip side, we can look at another example on the next slide that shows taking advantage of an opportunity. So the long-term environmental and social trends can support financial performance and create business opportunities. So what you're seeing here is an Indian company that was producing a piece that was required for a certain type of steel making. And so as the Beautiful China initiatives came into place, our India equity team was able to use the global platform and their conversations with the investment teams in China to recognize the impact that this would have. And it increased the demand for the product from this company in India. That caused, that they were able to invest early. This dynamic changed the growth prospects and the margin prospects, and it caused the re-rating in the stock that you can see here. And so by recognizing that early, we were able to take advantage of that opportunity.
Right.
Now, I think in addition to the financial performance, ESG analysis can also be used to manage the sustainability of performance and offer enhanced social returns. So in the dedicated ESG mandates, there's this example shows how we can do that with the topic of climate change. What you can see on the left is the performance of the JP Morgan ESG Asia Credit Index, as well as the non-ESG, the regular version of the index. And you can see that the returns are very similar. The performance is pretty close. But when you look at the carbon footprint of those two, the ESG version is much lower. And so it's actually contributing much less to climate change. And we can use the ESG analysis to manage around objectives like that, which is increasingly important for clients.
Great. So thank you, Eric. I think it is very important to give some example, as you mentioned, to the audience about what is the real life example from a credit investment point of view, fixed income, as well as the equity. And also, how does that compare to the, kind of sustainability of the performance vis-a-vis non-ESG specific investment opportunity. I can see that there are quite a number of questions, from the audience. So why don't we turn to some of the questions being asked by the audience. The first question that we got is, the ESG theme is booming this year. So what about any additional opportunity to be expected in 2021 and beyond?
Yeah, it's a great question, and I think 2021 is really going to be a key year for ESG investing in the region. I think there's a lot of momentum because of the things that we've discussed coming out of this year, and the announcements that governments are making right now are really going to have implications that will play out over the next year and the next few years. And so, I think in many ways the easy part is done. There's the commitments that have been announced, and I think 2021 is going to be about the implementation.
Right. So, and then the second question that we got from the audience is, how does our ESG investing selection on the bond side impact the company's behavior?
So this is also a very good question, because in our process, we try to go beyond what we're doing with the investment decisions and the security selection to then engage with the companies that we're investing with on these topics. So how can we use what we're learning in the research and the risks and the opportunities that we're becoming aware of to have a conversation with the company about how they can address those? And from our perspective as investors, we get to see different approaches that different companies are taking, or maybe some things that companies are doing in other regions, and really what are the best practices, and how can we share that with the companies when, so that they can best mitigate those risks or take advantage of those opportunities.
Right. One question from the audience, they want to find out a little bit more how you and your ESG specialized team work with the investment team, so fixed income analysts and then the equity analysts, because obviously ESG is a very specialized skill, so how do you kind of work with them when you are seeing the company or when you are creating ESG specific analysis and report on the security, and help them to combine the two together?
Yeah, this is also a really good question, because I think different asset managers do it differently. But at Manulife, I think it's important that we're working very closely with the investment teams, and so it's the ESG team is not an independent team that's only focusing on ESG strategies or only focusing on its own ESG research. It's really working closely with the teams to make the relevant data available to them, provide them with tools and models and resources that allow them to make sense of that data and apply it to their portfolios, and to do so in a way that really takes the existing investment strategy and then tries to build on it with the ESG capabilities that we've developed over the past few years. And so that's actually really challenging. It's something that we've been, we started a few years ago. It takes a lot of time and effort, and I think the depth and quality of that process are one thing that sets Manulife apart a little bit. And so, I think that's generally how the team interacts with the different investment teams.
Right. Another question from the audience is how does Manulife work with our clients? Particularly, I think it's referring to institutional clients or wholesale intermediaries on the ESG request. So if they have a specific mandate, so how do we actually work with them to create the portfolio based on their requirements?
Yeah, so this is also a very good question, and we've developed capabilities to be able to offer customized solutions to clients. So we do have some clients who have custom ESG policies that they want us to follow, or specific exclusion lists that they want us to apply to their portfolios. And we've developed the capability to do that. It's also part of what we're trying to do with the development of new thematic and dedicated ESG strategies is coming up with new portfolios and offerings to meet our clients' evolving needs. And so I think that's another part of it. And lastly, what we talked about earlier is we try to be transparent and communicate how we're doing that. And that's where the ESG client reporting and the sustainable investing report come in.
Okay, so another question is, what's the difference between a specialized ESG dedicated investment strategy versus incorporating the ESG elements in our normal investment process or the strategy?
So in all of our portfolios, we're integrating ESG, and that means using the ESG data sets that have become available to try and enhance the risk and return. Now, we can go beyond that with a dedicated or a thematic portfolio to focus on some of the sustainability objectives that a client might have. So that could be focusing on different themes, whether it's climate change or good corporate governance or governance structures or other specific sustainability issues or challenges that are being faced by the market, and looking at the companies that are providing solutions to those. So that's the new kind of dedicated or thematic solutions that we're looking to offer.
Right. So another question comes in and say, which market offer better investment opportunity related to ESG? For example, China. We talk about China committing to a target of 2060 carbon neutral. There will be a lot of new regulations coming out on that, or maybe India or other Asian kind of equity market. So what do you think will create the biggest investment opportunity related to ESG specific strategy?
Yeah, I think, to be honest, I think a lot of the markets in Asia are really attractive in terms of sustainability opportunities. I think the region as a whole, just because of its size, the size of the population, the pace of development, is there are natural environmental social pressures that the region is working through, and so businesses play a part in that, and as we navigate that creates really interesting opportunities, and so I think the it's hard to pick one market, because it seems like there's a constant stream of announcements that are being made, and just a lot of momentum throughout the region.
Yeah, or maybe from a slightly different angle for the questions. Is there any key ESG regulatory development in Asia? So which market you see being most progressive in terms of coming up with the ESG related regulations that is important or potential game changer?
Yeah, so I think you could look at China, which is having bilateral discussions with the EU and Europe about how they're developing regulation. You could look at the SFC in Hong Kong and the recent proposals that they've put out. The same in Singapore, and also the SEC in Malaysia. Taiwan is another market where the regulators have been active and are looking to make progress. But I think from an investment perspective, what's interesting is it can be harder to do the ESG analysis in the region, because there can be less disclosure from the companies, or less standard data or third-party ratings than you might find in other markets. And that's where it's really important that Manulife has a large large research teams and analysts that can know these companies really well and work through that in order to incorporate it in our research and active management.
Right. So you mentioned about the potential difficulties in terms of implementing a ESG investment process, including less disclosure in general, as Asian companies are just slowly or kind of adopting to the ESG standard. Availability of the data, can be an issue. Any other things you can think of as potential barriers to implement ESG investment strategy in Asia?
I think another component of that is the standardization of the data and the ratings. So, even once the information is disclosed, it's not always disclosed in the same way, and that's where we think it's really important to go beyond what we're doing in the investment portfolios, and to get involved in some of those industry developments. And so, as one example, we sit on the investor advisory group of the Sustainability Accounting Standards Board. I know you yourself are very active in the Hong Kong market. We try to take leadership positions in industry organizations that are working on this kind of activity. So, other examples would be the Asian Corporate Governance Association, or specific, even organizations who are looking at specific topics, such as Climate Action 100+, which we helped to found, and looking specifically at climate.
Okay, Eric, conscious of the time, I think one last question. Can you summarize in three simple, kind of a point, how Manulife investment management are differentiated, in terms of ESG investment for our clients?
Sure. So I think one is the depth of the integration that we talked about. I think second would be how we're building on that to offer thematic solutions, and I think thirdly would be the proprietary tools and methodologies and resources that we've developed to be able to do that work.
Okay, thank you so much, Eric, for sharing your view on the ESG. And thank all the audience for joining this very important topic. As Eric mentioned, kind of Go Green is really aligned with our corporate, cultures and including our corporate colors. So I think having a depth of the research capability, having the thematic, approach to suit different clients' needs, both institutional as well as retail, according to the mandate or the kind of particular requirements. And finally, I think in terms of our proprietary kind of a research in terms of integrating the ESG strategy in our fixed income and equity investment is absolutely key. So thanks again for watching, and please be reminded to give us your feedback on the session so that we can continue to improve on our delivery and the information given to you. Thank you so much and have a good afternoon.